Okay, well, we have earnings out of Microsoft. This is pretty much real time. We're getting these right now as we go here. So before I even jump in, please like and subscribe if you haven't done so. Really appreciate that. And as always, this is not financial advice, just reporting the news that's coming through with Microsoft right now. I'm not your financial advisor. Make sure you have one. It's important, especially when markets are in big trouble. Let's not waste any time at all. I hate when people do that. So let's jump right in. So here's the headline. Microsoft beats on earnings and revenue for the fiscal second quarter. So seemingly good news. They surpassed expectations sort of from the top line. So think overall hitting that big number, as well as the bottom line after everything was accounted for. So they had a great, a great time from an earnings perspective. We know one of the big things they were very focused on, a lot of conversation around, was the acquisition of Activision Blizzard, of course. So here's sort of where we're at, right? This was better than anyone thought from an earnings perspective and from a revenue perspective for the second quarter. In what's a surprise, I want to give you the most up-to-date number I can here. The stock is actually doing terrible right now. Let me just see if I can give you a quick number here. And I want to jump into these actual numbers. The stock is down right now, and after I was trading, about 4.5%. It was actually down a little bit more, but it's down 4.5% right now. This is a good company, right? This is a good company. I'm invested in Microsoft. I hold shares of Microsoft, no options, straight up shares. And this is why. Let's look at the numbers. So from an earnings perspective, they were at $2.48 per share adjusted versus $2.31 per share as expected. I mean, that's awesome. Revenue was $51.73 billion. Excuse me, $51.73 billion. Versus $50.88 billion, almost a full billion better. Revenue increased by 20% year over year in the quarter, compared with almost 22% growth in the previous quarter. The net income was $18.77 billion, which was up, if you can believe this, 21%. I mean, these are awesome numbers. Now, to keep going here, the company had $36.77 billion in unearned revenue at the end of the year. And there was a consensus of about 36.9, so just under what the street was calling. But I mean, we're talking like barely under for all things considered here. Overall, there was growth pretty much across the board from a product perspective. The only area we hadn't seen anything was around search and news advertising. That's pretty much the worst hit they took. But some highlights, right? Azure obviously still looking great. Xbox content looking good. I mean, overall, they're in great shape here, right? So let's just break down a few more pieces here as this release has come out. The Intelligent Cloud segment, which is essentially the Azure public cloud, generated $18.33 billion in revenue. That's about a 25.5% growth on that product line. Wow, that's actually really great. And it's actually a little bit above the $18.3 billion the street was looking for. Excuse me. Revenue from Azure and other cloud services grew by 46%. That's right on the mark. Expectation was 46%. Some were looking for a little bit lower. So overall, this is pretty good. One thing to call out, and this is really important to recognize if you're an investor here, Microsoft does not disclose Azure revenue in dollars, right? So it's all lumped in. Revenue from the personal computing segment, which for whatever reason is being called here is the more personal computing segment. I haven't seen that before. This includes things like Windows, advertising, devices, gaming, etc. was $17.47 billion. That's up 15.5% and above the consensus of 16.56. These are really good earnings. Microsoft also called out the fact that sales of Windows licenses is up 25%. This is pretty good, right? Xbox hardware revenue went up 4%. 1 year anniversary, Microsoft launched the Xbox Series X and Series S consoles. They had seen a huge spike previously of 166%, so no surprise here. We're getting a little bit more reality. But now, just in regards to the announcement of the acquisition of Activision Blizzard, which, again, the article's calling out some of the brands in here, but that's a $68.7 billion hit here. So I just want to take a pause for a second. A lot of times an acquisition of that size, especially it hasn't been cleared by the government yet, is going to get looked at. It can take a long time for it to happen, but all in all, this looks like really great earnings, top, bottom, and throughout. They're going to bring in another pretty big, good company here that's doing good things. So let's keep going to the details here. Productivity and business processes segment. This includes Office Dynamics, LinkedIn, hit 15.94 billion in revenue, which amounted to about a 19% growth rate. And again, yet another one from the analysts that were polled, the expectation was 15.86. So again, another solid beat. What's crazy now, as of the market close, I haven't calculated for post market, but you'll be able to do the math pretty easily. The stock's down about 14% just since 2022 started. Obviously, this is just getting caught up in the big sell-off, right? So let's talk about the one thing that I'm most concerned with here, what I'm most interested in, is going to be guidance, right? So we're going to be waiting a little bit later today for guidance. So the reason this matters, because we want to understand if and where supply chain issues are going to be a problem, if and where inflation is going to be a factor into revenue and or profit, so think top line and bottom line, and the general forecast for third quarter at this point, according to analysts, is 48.23 billion in revenue, again for the third fiscal quarter, which would represent about a 15.6% growth rate. The next call will be at 5:30 p.m. Eastern time tonight. That's where we'll actually hear from the executives. Let's just take a quick pause here and think about what we just heard. Microsoft absolutely smoked the numbers, pretty much beat every estimate imaginable, or tied some, or maybe one case there they were slightly below. Their growth rates are absolutely phenomenal for the size of the business that they are. They're having a down year tied broadly to their large tech sell. And from what I'm hearing out and about, hedge funds, private equity funds, institutional buyers, they like Microsoft, see a lot of value here. And even the analyst estimates for price are quite a bit above where we are today. So I never give a price prediction because that's not the way that I invest or trade. But what I will say is I am currently, a holder of Microsoft. I intend to add more. And at this price, it's sort of a no-brainer for me in my portfolio. I think it's a good payer. It's got good growth. The numbers are phenomenal. The growth rates are great. The expected increases coming down are going to be good. However, full caveat, I need to hear more on this executive call to see what they think is going to happen, what the headwinds might be, where they can see hiccups or issues coming. But until we see all that, I don't have a lot to go on. And I'm actually I'm a little stunned to see this huge drop in the post-market close here. So we're going to have to see what happens. Hopefully this is just tied to the broader market dip and nothing really too serious. So all in all, great news, good earnings. This is what we need, team. Like, we need good earnings, right? These are good earnings. So let's keep it up. We'll be back with more once we have it. Thanks so much for watching. Enjoy the rest of the day. Thanks, everybody.